What's up, Mortgage Coach? Dave Savage, founder of Mortgage Coach. I'm with Julian Hebron. Julian, what's up?
Hey, Dave. How are you? Good to see you. Happy
Good
Friday.
to see you. Happy Friday, you too. And it was great seeing you at the digital conference, Digital Mortgage 2018. You were incredible, by the way. You were my favorite judge, taking nothing away from the other
thank
judges.
You.
Yeah,
thank you.
So guys, I am a big fan of Julian. I follow him on Twitter. And probably one of the only reasons why I can look at Twitter is just to see what you're doing. Looking forward to seeing you at Sales Mastery and what your takeaways are there. I also read the Basis Point. I mean, it's a great source of content. I know when we scheduled this, we scheduled around the concept of, Julian, who do you think the biggest disruptors are? Because we're both sharing some of our takeaways from digital mortgage.
Right.
By the way, guys, I put a link to my debrief on digital mortgage down below. So if you want to hear me rant for 15 or 20 minutes on what I got from it, it's down below. But Julia, before we get into the disruptors, interest rates have just rapidly changed. I mean, it's a market shift that's taken place. So why don't we kick it off with you sharing some disruption ideas and who you think they are, but why don't we kick it off with you telling us what your thoughts are on current interest rates and how we can still kind of do big ideas, but navigate the storm of short-term rate changes.
Yeah, thank you. I think that's a good setup. So just for anyone that doesn't know, the Basis Point is a sales and brand consultancy to the industry, and I've been around for a long time as a producer and executive. And the Basis Point helps companies, navigate this sort of new disruptive world that we're in. But interestingly enough, like Dave and I were talking about this, and you can't, just what he just said, you can't talk disruption and innovation on a week like this. 2 days ago, rates basically drastically by a full quarter point exceeded what the MBA's projections were for year end. We're just starting the fourth quarter and we're already past year end rate projections. So I think it's gotten very real in terms of rates. The jobs report this morning doesn't help matters, even though job creation was a little bit lighter. The unemployment rate was the lowest in 69. So this rate rise trend gets exacerbated. And I think it does disrupt people's mindset of, I was trying to innovate and now I'm back to triage from a budget management standpoint. Innovation obviously goes very closely in line with budgeting and planning and a little bit of spending. So with that said, we want to be very sensitive about that topic, know how serious it is. Most innovation goes to a marketing mindset over a sales mindset. And what I mean by that is the systems that go in place, all the activities that go in place, the disruptors that are kind of making big moves are all masters of customer acquisition. They already have the customers. They don't need a retail sales force to get customers. So that's why when we think innovation, we tend to think of customer acquisition. And so I'll say a statement, and then Dave, I'll ask you to chime in to see if we're on track here. But marketing as a revenue center has to be the mindset if you think about innovation, and it does marry up with this extremely sensitive budget theme that's going to become all the more real as rates continue this trajectory. So I'm going to pause there and see if we're on track with that statement.
Yeah, totally on track. I mean, the only thing I would add to that, and I think it's a miss on behalf of the industry, is when we look at all the money we're investing in the digital mortgage, in innovation, in marketing, I just think the lending industry really misses the opportunity to invest to improve conversion. And I just think we need to redefine conversion. It's not just I got a lead and I get them into a loan. That's conversion 101, but then conversion, they're a client for life. They keep doing business with me. And I just think the way we prioritize and invest kind of puts that as a number 2, number 3 as an industry. And I think we could do a whole lot better when it comes to investing in innovation, investing in digital mortgage, and doing it with a conversion first mentality. Anyways, those are just my thoughts.
Correct. Yeah. I mean, because again, this all comes to when you think marketing, it's all like funnel activity. And again, if you have a sales mindset, you're not always thinking about funnel. What does a funnel even mean? You're just thinking about what you just said, like, hey, I'm going to do some open houses this weekend. I'm prepping for those. I'm doing my, rate reviews, and my rate flyers don't look great this week, right? Stuff like that. But that's all this kind of, if you think about it in a marketing sense, it's the top of the funnel. You're talking about sort of like the middle of the funnel of how am I converting them, and then also you could argue the bottom, based on the statement you just made, sort of starts the cycle anew. I define the bottom of the funnel as a maze, meaning you've closed the deal. How are you going to amaze that customer now going forward by having enough of a grasp of their data and all the things that you've collected on the 1003, which is everything about them, and be able to market to them, to your point, and have a customer for life, or, obviously that term being the cross sell, right? How are you going to kind of talk to them about things that are coming up? The ages of their kids, all this stuff. So I'll give an example. So when you think about marketing as a revenue center, I wrote about something earlier this week that mentioned a few very tactical things. I'm going to go through a couple of them today. Number one, the basic, right? The marketing operating system, like a Total Expert as an example, okay? A lot of firms have it. A lot of firms are shopping for something or something like it, right? But are firms really understanding what it is? To your point that you just made, are you actually using it for what it's worth, or are you using it for a CRM? CRM, anything can be a CRM. A system like that, though, actually can run a funnel for you and in fact, automate it for you. It can automate your selling skills. If you're a loan officer or if you're a marketing department, you can automate those skills for a whole sales force, right?
Yeah,
you can take...
Not to jump in, I just want to make sure you can automate an annual review, which is an incredible funnel building and funnel conversion tool. So sorry to cut you off. I just couldn't help.
I was literally just about to say, you can do the same thing with TCAs, right? Like the TCA is part of a funnel. It's like you're in the conversion phase of the funnel. But what happens after that? Like, you can build in steps. So I sent out the TCA. It's going to be a little quiet because it's a purchase client. What am I going to do between the TCA and the time that they're actually getting back to writing offers again, right? That is the type of thing that if folks are slow, if you're a loan officer and you're slower right now and you have that tool set in place, that's what you got to learn. If you're a company that has the tool in place and you've been too busy with not kind of getting into the real granular bits of your marketing operating systems, this is where, this is the time to study it. And if you're an executive, my one suggestion would be to hold the line on systems like that, because they can turn marketing into a revenue center if you commit to it. It's not a line item on a budget spreadsheet that is up for the cutting. It is a system that you have to invest in to make marketing turn into revenue.
I align with that for sure. And we're actually seeing just a tremendous amount of momentum, especially in this rising interest rate market. Loan officers need to be advisors. They need to create solutions. And today, by the way, we do a mastermind every Friday at 9 o'clock. And I had Jeremy Forcier. I mean, he literally just parachuted in. Last night, he sent out to all of his realtors what's called a seller buy down, because in a rising interest rate environment, he actually had a realtor, the seller didn't want to lower the price to sell it. And Jeremy said, well, hey, why don't we buy down the rate by 1%? So big buy down. And now he's presenting that as a way of still selling that home, creating value. By the way, I'll put a link down below to Jeremy's seller buy down. But I mean, it's just perfect evidence. In today's market, loan officers, they don't just need the CRM, they need to use the CRM, the marketing automation, and they need to use Mortgage Coach to deliver solutions, because it is a market where you can't just sell products, you've got to sell creative solutions like never before in today's market. At least those are my thoughts.
Yeah, couple quick notes on that too. I mean, for everyone knows this, but just in case some of the newer loan officers don't know it, the easiest way to kind of put rates into perspective is like FreddieMac.com/PMMS, Primary Mortgage Market Survey. That's their weekly survey. You go in there and just scroll through it. It has the entire history. A 5% rate, yes, it's jarring to all of us, who stare at rates every day. but help your clients put that into perspective. It's the completely obvious statement, but I can't emphasize enough how relevant it is to say that 5% mortgages are still quite attractive. That's a small one, but I can't help but say it. I mean, in all my days producing, I spent most of my time not talking so much about buy downs, but talking about rate perspective,
Hey, Julian, I'm sorry to interrupt you. I want you to share your desktop because there was an article you wrote recently that I really loved the way you talked about ROI strategy. And while I think you really wrote it for a C-suite group, that was a C-suite article. If you could pull up your screen real quick.
Sure.
Because
yeah.
I love how you talk about, we got to keep our strategic, innovative focus, but let's face it, we're in this, interest rate changing marketplace. And it's important, guys. I mean, the referral-based local loan officer, the machine is coming. Like if you listen and watch my debrief on digital mortgage, I mean, I'm just laying out facts. These are like facts. It's a fact that B of A has 47 million households that basically are 1003 ready. So if you could just walk people through this, and by the way, guys, I put a link down below. So what you're looking at here on the screen, there'll be a link down below, but walk us through this. Maybe walk it through at a C-suite level, and then I'll interpret it for a branch manager or a loan officer. Yeah,
sure. Let me just see if I can do, I don't think I can do full screen. That's okay. But so here's the, okay, you can see it. Good. So, the question at the bottom is the question. Do lenders define and sequence innovation properly, right? And this week's events with the rate market is the perfect example of how things go. The way I have it laid out on the screen, box 1, box 2, box 3, is how companies tend to think. I'm thinking about ROI all the time, profitability all the time, and that is the end result of the operational efficiency and customer experience. So it's selling and fulfillment, right? You can see the arrows of what suggests that the model should be, which is that you got to start with vision. If you're going to do innovation and define innovation properly and stick with the script and not scrap systems that you've spent the last few years innovating on because rates have shot up and your P&L isn't looking good, I get how complicated it is, especially in the fourth quarter every year to do this. But this is where vision should come first. As I say, you don't plan the budget, you budget the plan. But flipping vision to the front is where the industry had started to get most recently. And now all of a sudden, a week like this puts it right back like you see it on the screen. So the only reason I kind of structure it this way, and I thought it was worth mentioning today, is because to the extent that you can keep the right things in mind as you're staring at budgets and making sure that your vision doesn't fall apart, try to put that vision first. And that's why I say the main vision when it comes to innovation, the folks that all the industry is going to be competing with in the next couple of years are folks that already have the customers. So you did promise we would mention a couple of these. And the obvious ones that nobody's really kind of gotten granular on yet in our predominantly retail world is the impact of Zillow and Credit Karma. Zillow has 187 million customers coming to the site a month. They already have all the customers. In August, they got into the mortgage business. Credit Karma has 60 million subscribers on their credit platform, and now they're getting into the mortgage business. So when you think about customer acquisition, which is this middle one, that's who you're up against. The advantage that the retail shops have is what you see here in the middle is the local part. The local part matters. The digital part is where your investment as a retail firm comes, but you have the local part that no big firms like the two I just mentioned are ever going to be able to touch.
Love that. Keep it rolling.
So does that kind of cover it? Yeah, I didn't know if you were going to want to kind of jump in, so I was pausing there. But yeah.
Let me do one thing, and then I want you to cover a couple more disruptors. I'm going to actually steal the screen for you. Before I do it,
go ahead.
I want everybody to remember that bucket. And I think Julian really just spoke to the C-suite. If you're a local referral-based loan officer, producing manager, I want you to think of that is your strategy. And most loan officers I know, they're like, I'm an advisor. My advice matters. And then I want you to think of it as like requirements. Like if you were an advisor, what are your, not budget, but what are your mandates? What are the non-negotiables that you're delivering to every family? And so strategically, if you are a local mortgage professional, this is your model. You're doing some lead development, you're doing advice, you're doing transaction. And I want you to replace strategy with, hey, I need to realize that the transaction is going to be faster and easier. My advice needs to be bigger. It needs to be more tangible. And also from a client for life perspective. I'm going to give a nod to Todd Duncan and High Trust Selling because Julian, you and I are going to both be there next week. And I also want to give, because I really believe that in today's world, you as a mortgage professional, you may be stressed out, you may be freaking out about rates, but you need to show up and emotionally connect with your clients now more than ever. You need to follow that high trust strategy, asking them what the family, what are your hopes? What are your dreams? What are your goals? And then, by the way, this is, while it's a little mortgage coach self-serving, I don't think the way you show a family that you showed up with their hopes and dreams is with a transaction. You show up with mortgage options in a modern way, high trust mortgage coach experience, whether it's a first-time home buyer, you show up and you deliver advice, whether they come into your office. So I just want every, call it loan officer and branch manager on this call, connecting the dots with, yeah, you're panicking. Yes, rates are going up, but you need to deliver that high trust point of sale experience with each and every family at another level. And you also need to start getting to the goals. Like you're not selling loans, you're helping people achieve their goals. So Julian, I don't know if you want to add anything to that. And then I do want to make sure we get to, a couple more disruptors, and then we'll take a break and we'll probably have a debrief we'll do together after Sales Mastery.
Yeah. So here's what I can say. I want to do like maybe one or two more disruptors like in very short order. And then I want to make one more sort of tactical recommendation. But like disruptor wise, the one that you saw me interview on stage at Digital Mortgage was Open Door. I've been paying very, very close attention to that firm because they've raised almost $2.5 billion to purchase homes from people. And so when we talk again about customer acquisition, they are getting the customer when they sell their home. When you sell your home to Open Door, that's when they get you. You're obviously going to be buying another home. So now they're looking to, build out their mortgage division so that they can make the whole thing seamless. But they are literally acquiring the customer by buying the customer's home from them. Do you think that customer is going to be loyal and Open Door is going to have their attention? Yes.
Right.
So that's kind of, again, one of those things that we're all kind of competing with now, and you have to kind of think about that in perspective. With that said, I want to go all the way to the tactical side and say, if you're retail and local is the advantage, like I just pointed out, then if you Google your own company, most companies don't show up in that right-hand bar of Google where you get to sort of see it like a full detailed profile of your firm. You're going to show up on those blue links that are on the left, and there's not much there, right? So there's a company called Yext, Y-E-X-T, that not everybody knows about. I think they're under radar because they're a big public company, but they specifically have a specialty in mortgage. And this is a company that I've just gotten to know recently that I was frankly blown away by, because they can come in and immediately within weeks start making your company's really granular local branch level results on the right-hand page come up. The reason those are so important, I'm referring to desktop there, is because with mobile, that's what shows up. It's not the blue links. That's what shows up first. And more people are searching voice, and that's what shows up on voice. But that one I think is incredibly powerful, affordable, and fast. You don't have to spend a year implementing it. You can get that needle moved immediately. So that was one that bridges that digital local thing that I just talked about before very, very nicely. Well, not a paid endorsement, by the way. I just like it.
Yeah, hey, Julian and I are here to help the mortgage industry be more effective at not getting disrupted, but being disruptors. And at least as a local mortgage or real estate professional, have a competitive advantage. So hopefully this interview was valuable for you. Highly recommend that you tune in to Julian, the Basis Points, follow him online, Twitter. Sales Mastery is this coming week. You know, if you want to know some of the best takeaways from one of the mortgage industry's brightest minds, both from a marketing and technology perspective, Julian Hebron is going to be there. He's going to be taking notes. Julian, I really appreciate you coming in here. Any last words before we call
Thank you. No, that's it. I will be live broadcasting on Twitter, Instagram, and also be blogging from Todd's event next week. So anyone that doesn't make it, you know, my job is to make sure you get all the good stuff.
So if you got value from this, give us a like, share it with your mortgage friends. If you're watching this on LinkedIn, this is a message that Julian and I are passionate about. We want to help you guys have a competitive advantage. So again, give us a like, give us a share. Have a great day.